Are you aware that we've created these three
Yes.
different earnings
Yes, I
mnemonics?
saw that.
Yeah, that's important. Like if you look at a stock like Teva, some stocks actually, if there's no change in that information, it's indicated that you're getting a pretty pure earnings picture. If you look at a Teva, for example, when you look at operating earnings, which by the way, operating earnings are still the best metric in my opinion to use. But if I go down here and look at diluted earnings, which includes, various, charge-offs and so on, then you get a totally different picture of Teva. But it's still a relevant picture. But the operating earnings, in my view, are the ones that drive prices more. But if you look at, say, a Church and Dwight, as an example, and look at it from a standpoint of what I call diluted earnings, it's a slightly lower number than operating earnings, but there's no real erraticism in it. Yeah, it's still a smooth line. It's not like you saw with Teva or one of the others. I'll tell you one thing that I'm starting to see. There's starting to be some of the really great stocks right now. Some of my favorite stocks are really starting to command premium valuations. Look at Ross Stores. And this is something important too. When you look at a historical chart, like here I'm looking at a 20-year chart, Ross Stores looks like it's fairly valued here. You drop this down to a 10-year chart, and your picture changes a little bit, see? Because again, so I want you to also know, and all subscribers to know, that some people get really confused in that and they don't like that, but the point is it's dynamic. Growth rates change. Clearly, this is a different growth rate over the last 10 years than if I go back and draw this over the last 5 or 6 years. I get a reacceleration of growth here. So the point is, that's telling me a lot. It's saying, hey, this company's actually accelerated. Of course, I've got it at the bottom of the graph here also. But anyway, I'm digressing. Let's stick to your questions.
No, this is great. One thing that, as a value investor, I mean, I'm retired.
Yes.
So I have a basic rule of thumb that it's not something that I live and die by. I mean, I will digress from it. But I like to see dividends. I mean, I want to, even if it's a low dividend, I want to see some money coming back into my pocket while I'm waiting for the stock to proceed. So, dividend information, if you could graph the dividend, especially the dividend growth information out, that would be very useful, because you go into like Morningstar or whatever, and you try to get the growth rates, and you compare them to, say, some of the other analysts out there like David, Ben Knapp, and
Right.
a couple of the others.
Right.
And you get different numbers.
Well, yeah, and that's the thing, and you also have to always. That's one reason why I said earlier in this conversation that we're going to be adding monthly or at the minimum quarterly information. Because let me show you a couple of things that you might find then, based on your question, as a flaw in fast graphs. Before I do that, I want to make sure.
Hey, Chuck, I'm not saying it's a flaw. I'm just saying that it would be useful to see dividend growth rate information depicted in the graphic form that you have here.
Yeah, no, I wasn't meaning to denigrate the fast graphs. What I was saying is that it's a flaw from the point of view that what we try to do is report as conservatively as possible. Let me explain, okay? By the way, before I do though, because this just made me think, I want you to notice that these diamonds represent fiscal years. See, here's a case of a company that does not have a calendar fiscal year. Because I got into that discussion, I believe it was with Cisco in the last article I wrote with some people, and to where you have a fiscal year that ends in June. Okay, so what I want you to see here, John, is that when we're reporting dividend data, we're reporting fiscal year down here. Okay, which ends in this company's case, it ends in June. But here's something we do with fast graphs. Now I'll go ahead and use this as an example because we just talked about it. We do give the dividend growth rate here.
Right.
Okay, and what we're also going to do, what we're going to add is we're going to average it. But here's the problem we have. I want you to notice we don't give any dividend data because remember our fast graphs are run annually. So we only give the last fully reported dividends, or and when we're calculating performance, we don't put any 2012 data in here. So that's what got some of the confusion in the article. So the growth rate, it's gone from $1.03 to $1.08. And I don't know what that is, but that's probably only 3 or 4% growth, from the $1.03 to $1.08. But none of that's in there. Now, what we are going to do are two things. We're going to go with either a monthly or quarterly, where we then will be able to start including that data. Because here's what would happen: we used to include the information, and then lo and behold, the company cut their dividend. And then what we would have in here would be an inflated value. We'd have a number in here that say that this was an estimate of 9,000, and then the company cut it to 5,000, and then all of a sudden we were misrepresenting our calculation. So about a year or two ago, we said, okay, we will only include in the performance results dividends that have, already been reported and paid. But then our problem was, we're not showing anything for the current count. In other words, we won't show anything in 2012 until May. We will show, in this example, 2012 information will show up probably in around July something, probably maybe the end of July. It'll take that long for the data to be picked up, in the databases. But the point is, it'll show that. But here's a couple other things too. Now, we are going to do two things, and we're working on this. We're going to convert this to either a monthly or quarterly graph. That way, you'll have, we'll only be a quarter behind. We just won't include this quarter, so that'll give us much, a much more what I'll call precise calculation. We are going to average and add up the growth rates based on that. Now the trick is, though, how do you, you have to mathematically qualify or quantify for a 1 or 2 quarters. You're going to have to either annualize the number or something for that last data point. You follow me?
Sure.
But we are going to do that. We're also working on a reinvestment option, which would probably be a button, click here for dividends reinvested. And that's, again, just going to be a mathematical calculation based on the closing price on whatever it is, the pay date or the X day. I'm not sure what date we're going to use yet. We're looking at that. But it'll just allow you to have at least an idea of what would happen if you reinvested the dividend. So we're going to add that kind of performance too.
Now, but you're going to continue to show the payout ratio, right?
Oh, absolutely.
Having historical payout ratio is useful because you can see what's going on.
Yeah, we're probably not going to eliminate anything we have. The only thing we might do here, John, is add quarterly information. In this last number, we're probably, like I say, we're going to maintain this level of fast graphs. What you would have is somewhere on this tool, you would have a button that says monthly or quarterly graphing. Okay. That you'd be able to, so to speak, convert. Now we haven't, until we finally see it and play with it, I'm not sure how we're going to present it yet, but it's either going to be an addendum, an additional tool, or it's going to simply be a replacement. And because again, like let me show you something about screening.